I decided to make a new series where I'll show some indicators and how I use them because I scalp over 50 trades a day with some success, I would say. And the first indicator that I want to showcase is actually the Ichimoku indicator. This is going to be a very simple beginner-friendly guide. I'll show you how to set it up, what to look for, because I've seen some weird videos that say that you should remove the lagging span and other things. And I'll tell you why you will get wrecked. I'll show you examples of how you get wrecked if you remove the lagging span. We can do some tests. And yeah, just like the like button. If you want to see more videos just like this, subscribe. We're at 49,000 subscribers. If you can see the screen behind me, it will definitely help out the channel. And I'm sponsored by MEX Exchange if you want to buy some cool altcoins before anyone else. And I have my crypto scalping group in the description down below. Let's talk about the Ichimoku Cloud. So first of all, you want to use TradingView. I have a link for TradingView in the description down below if you want to set it up. It's the best charting software, like hands down, for alerts. For you have a screener. I've got the paid version, the maximum version, $60 or something per month. Definitely worth it in my opinion. But because you can set up a lot of indicators and I use different layouts for different strategies. Ichimoku is my favorite strategy right now. The first thing you want to do is click on indicators right here and type in Ichimoku, just like this. There's a few ones. I've tried the Harry Potter one, H Potter one. You can just use the basic one. I have it on favorites and it's very, very simple. If you want to make the lines bigger, if you can't see and everything looks weird, what you can do is just click here on the settings, click here and just raise the, click here I mean, and raise the opacity, just like I did. Opacity on the read, blue and red is at 100%. So this is the first thing you want to know. And there's basically a few components in the Ichimoku strategy. And then I'll tell you a few things you want to add on if you want to have better entries, what I personally do. So Ichimoku has a few components. The first one is this cloud. This basically is a trend indicator. When the cloud is greenish, you see that? This span, it's called the span, is green, is above the red one. You're basically in a bullish scenario. Combined with other indicators like EMA, moving average, it shows a strong trend. When it's red, just like so, you're basically in a bearish scenario. So right now, we are in a bullish scenario, but you can't long yet. You gotta wait for a few other things to play out. First, you want the lagging span to be not just above the cloud. Well, a lot of YouTubers will tell you first remove the lagging span. I've saw that, but when you backtest it, you will lose your money. If they show me a backtested example that you can trade with Ichimoku without the lagging span, I would agree, but you definitely don't. You can't. So the first thing you want to have is the lagging span above the cloud, but not only that, but also above the price. And I'll show you why you want to have that. And the next thing you want to have is the blue line. It's called the conversion line, has to cross the red line, which hasn't happened yet. Here is the blue line. Here is the red line. They gotta cross. So I'll show you. We'll backtest it and we'll see where we can long and how we'll actually set our stop loss. So I'll show you a few examples of what I do to actually do that. So now the price dumps. Other YouTubers will tell you, well, now the blue line crossed the red line right here. The lagging span is below the cloud. We are red, so you should short. But check what happens next if you short. It pumps up and you get stopped out because you'll probably have your stop loss here or here. You get stopped out. So what I would rather do is wait for a pump like this. Lagging span is above. Now it's even above this high. It's above all the prices. The cloud is green. Blue line crossed the red line. And I would like to have two more indicators. First, I want to have the EMA, the 200 EMA. So you type in EMA here, click on settings, inputs, change it to 200. And I like to have my EMA in white because we have the conversion in blue. And you can also use a moving average, but it's obviously up from here. And what I like to use instead of ATR to figure out my stop loss, because I'm almost placing their stop loss here, I will place it here because it's in swing low. But to understand that it's there, if you are a new trader, I would use Woman 2, which is the free market cipher basically, and I would check for the wave. And here was the wave, so this was the swing, right? If you're long in here, this was the swing. You would place your stop loss here. So this was the swing low. So if I would go long, and by the way, I've backtested it, 1 to 2 and 1 to 1.5 works well. I do 1.1 to 1.5. So if you enter here, you would have your stop loss here, and I would have my take profit at 152 because of fees. So somewhere around here. And let's see how it plays out. And by the way, I just saved you some money because you didn't have to short because of the lagging span. So now we're long, and this trade was a loss. But it was a very probable trade. We were above the 200 AMA and everything worked out perfectly. By the way, I'm getting around a 50-50 win to lose ratio, but you're getting 1 to 5 risk to reward. So that's 25 trades up because 75 minus 50 every 100 trades, which is a 25% margin, which is 62.5% odds, basically, on a 50-50% trade because of the risk to reward ratio you're getting. So now you actually have a short entry right here in this area. To place a short entry, you would want to have your stop. We're below the 200 EMA, right? And I would have my stop right here on the swing high, which is here. You can even move it upwards, and my take profit would be 1.52. So instantly, when we get stopped out here, we can place a trade on the other direction. And let's play it out. And by the way, you can get streaked up and down a lot with this strategy. Speed it up a little bit. Okay, we got stopped out again. Now here, lagging span is above, cloud is above the price, and we're starting along. We're actually gonna backtest this live. Swing low is here, 1 to 1.5. By the way, this is a lot of percentages gained. So if we get one win, we might actually get most of the money back because the two trades were 1.5-ish risk percentage-wise. So we're long here, and we got stopped out because the market is very choppy right now. This is a third trade lost. We're continuing to find another entry. Here is the entry right here. We can short here with swing low here, 1 to 1.5. Should be around here. And let's play it out. Well, that was a win. And it was a big win. So that mitigated two of the losses with one win. So we're basically down one trade. So now can we short again right here? Yes, we actually can if we really want to. We have the cross, we have the lagging span. Everything is actually set up perfectly for a short. The weird time is that we are, from what I can see, we're in 27th of February, which is wartime in Ukraine. So that's definitely not the best time to trade in general. But if this is a win, with two wins, we'll mitigate and we'll actually be up a little bit. Some traders who move their stop or close the trade when you actually have another cross to the downside, but I wouldn't. I found this not very productive, especially in choppy markets. This is another long. We have the cross, we have the Ichimoku Cloud, and we're just gonna be testing this strategy. In weird markets, you can have very bad down streaks, but then you can have some up streaks. As soon as we lost this trade, we're actually in another one. And if this trade is a win, we'll actually be up percentage-wise. Yep, this is a win right here. And it's a big win. It's a 5.7%. So with two wins, three losses, we're actually, or four losses, we're actually up right now, percentage-wise. Right here, what I would do is I would probably long again, actually, But I would use this as a stop loss because this is the volume 2 indicator. Maybe use this as the swing low and target something like this, 1.5. Let's see how this plays out. It's another win, 4% win. And we are up. This is how you use it. You wait for blue line crossing red line, lagging indicator above, and cloud above. Actually, in this scenario, because this is, I prefer to use Heikin. Right now, I placed some shorts. We were below the 200 EMA right here. We had all the crosses, moving average down. Plus, from a structural standpoint, we had a lot of lower highs for Bitcoin. And that's why I actually started a short, placed a short right here. Let me know if you have any questions around Ichimoku. I'll answer them in the comment section down below. I would love to help you guys out and see you next one. Bye.